everyone, myself Vaibhav. In today's session, we are seeing that the USD JPY is finding support above the 104 levels, and I think there is this possibility emerging of a breakout on the higher side. That's a breakout on the bullish trajectory, possibly for USD JPY, and we will try to see what is the driving force behind this change, and also if there are optimum entry and exit points for us to get involved for a long trade in the today's session. So let's get started for today's session of market movers, and aptly the title itself is the USD JPY breakout looms. So let's get started. If you consider the trading context for the day, we saw the unthinkable happening in the China as China has entered into an deflationary phase, and we saw China's CPI reading in negative territory at minus 0.5% in terms of year on year. And this is the first time in this decade that deflation is a phenomena in China, and I think this also can be attributed to the fact that food inflation has gone substantially down, and one of the major driving factors which was keeping the prices higher last year was the high pork prices as a result of African swine flu, and now that base is gone, and we saw that prices have moderated, and I think that is one of the major driving factor here. And also other segments of the economy are also experiencing the COVID related slowdown, and that is also contributed for the price pressure. And as a result of that, as a result of all these cumulative factors, we saw the CPI entering into the negative territory for the first time since October 2009. That was the time of financial crisis. For the European trading session, there were not many data releases of importance apart from the trade balance data for Germany, and we saw the data release as per expectations. There were not many deviations, and as expected, the October's trade balance is in surplus, but it is lower than the last year's number. But still, it is good enough at euro 19.4 billions. Moving on to the North American trading session, we have this EIA crude oil inventory data coming up, and the expectations are of a drawdown. We are expecting the drawdown of around 1.3 million barrels, but we have to be mindful of the fact that yesterday's API crude oil inventory data saw the addition of the inventories that was kind of contrary to the expectations. So we will have to see how the EI's crude oil inventory report comes in, and if we take a look on the price trajectory of the light crude and the Brent crude, both the crude futures are trading on the higher side, and I think this is likely to be sustained in near future as the vaccine rollout has given hope for containment of this pandemic, and that is going to drive the economic activity, and crude oil is going to be, of course, the beneficiary of that. Now, moving on to the technical outlook, we will first see what's happening in the USD JPY and its possible trading opportunities, and then we will also see the consolidation phase of Euro USD. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and here the trajectory for the USD JPY has been of continuous formation of lower highs, and on the lower side it has found good buying momentum, good buying support closer to this prior swing low, and this time around also it has entered into the consolidation phase after forming this identical low, and for last couple of sessions we have seen it continuously sustaining closer to the 104 range. Even in today's session, we saw the price level of 104 acting as the important support area, and we didn't really see the price breaking below that. And that has given me the hope that this time around, we might see this retracement continuing on the higher side, and in that possible scenario, we can even target these immediate swing highs. So for today's session, it will be make or break time for USD JPY, and I think the breakout is going to happen. If not on the upside, then we will also mark out some prices which will be crucial for pointing out any trend change in the USD JPY in the near term. As is the case, mostly we consider the price range from the near term perspective. So even when I am saying today, I am talking from the intraday to maybe a day or two sessions timeline, and not medium to longer term. So looking at the lower time frame chart of this 4 hourly, we have these important resistance coming into play around 104.40. That is the price range which we have to be mindful of. And for last two sessions, the USD JPY hasn't really been able to cross and hold above it. At the start of month, we saw this brief time where the USD JPY was indeed able to hold above it, but then we saw this break, and then this steep decline followed. Now, slowly and steadily, it is trying to climb back, and in due course, it has even gone above this middle band of the regression curve. But I think from our trading perspective, it will be critical to see if it is able to cross and hold above it. As I said, for the time being, for today's US trading session, on the lower side, the 104 price is going to be of high importance, and then on the higher side, a break on and above this immediate resistance zone will be needed for a big move beyond this immediate swing high, and that possibility is there. So we will be targeting the long side trades, that is buy trades, as long as the USD JPY's price action is above this 100 SMA. So the 100 SMA is going to be the base for today's session, and on the higher side, if we do see a break above these 200 SMA, then I think the possibility of an break above the central pivot point of this month's pivot point series will be lot higher, and as I said, we can then target the prior swing highs and even beyond that, and the risk is not that high. I feel if we are going in for the trade anywhere above this 100 SMA in the price band around 104.10 to 104.20. The stop loss anywhere closer to 103.95 to 103.9 should be good enough. That's a risk of around 15 to 20 pips, 25 pips, and on the higher side, even if we want to go for the risk reward ratio of 1 is to 2, we won't really need to target big price move, and our initial condition will be met if we keep the target price anywhere around 104.8 or just in the vicinity of that. So our conservative requirement will also be met. Now moving on to the Euro USD. Euro USD has been in the consolidation phase after rising to the 61.8% Fibonacci expansion of its prior rally, and we saw it spending many weeks, almost a couple of months, around this 1.19 price range, and then finally in the last part of November we saw this break, and then that gave additional fuel to this rally, and we saw these fresh highs being formed closer to the 1.215 range, and after getting close to those levels, we are again seeing that this consolidation is happening, and the longer term prime trajectory still remains bullish, but retracement can't be ruled out, and that's what we are targeting. Even a couple of sessions back, I had done this session with the title Euro USD looks overbought, and I think if any of you had gone in for that trade, you might be sitting in a good amount of profit, as we saw that our targeted price range has been holding well so far. I think the targets not have been met, but the price trajectory is in our anticipated direction, and maybe in today's session or next couple of sessions it might even deep further, fulfilling our target. And in due course we are again trying to see if there are any fresh opportunities to get involved in today's session. So if we look at this lower time frame chart, now the price trajectory is looking flattish, as we saw this entering into the lower band of this regression curve. Of course, the regression curve is still steeply inclined on the upper side, but we have this price in the lower band, and I think that is going to force the flattening of the regression curve in next couple of sessions, if not at earlier time. And on the lower side we do have this support. It was actually earlier the resistance, but then it was breached, and now for last couple of sessions it has been acting as the support for Euro USD's price trajectory on the lower side, and Euro USD has been able to hold above it. And if we want the correction to deepen, then I think the break below this will be of critical importance for us. And in today's session, the prior price zone is going to be of guiding light for us, and as long as the prior swing highs are not breached, I think we can continue to target for possible retracement even below these R1 level, and that's going to be good enough for us. So if you want to get involved for any trade, I would suggest that it should be on the short sale side, and an entry anywhere closer to this day's high, which was there around 1.215, should be good enough. Right now the price has declined almost 40 pips from those levels, and we will have to be fortunate enough for further retracement on the high side and then do consolidation, and only then we will be in a good position to target the risk reward ratio of 1 is to 2. Right now the consolidation is going on, and now it has gone closer to the immediate support zone, and it will be interesting to see if new swing low will be formed or not. If new swing low is formed, I think that will increase the chances of it breaking below even this 200 SMA in due course of time, that is in next couple of sessions. And for that the formation needs to be of lower low and lower highs, and if we see fresh low being formed below this yesterday's low, then that will be an additional point for short sell traders to pile up on their position and look for some profit booking and further decline. And in that eventuality, the price targets around 1.205 can even be adopted, and that will give us the risk reward ratio of our required level of better than 1 is to 2. So if we are going in for the entry anywhere in the vicinity of 1.214 to 1.215, I think we can keep the stop losses, as I have said in prior session also. Not much has changed, and because of that the prior session stop loss still holds good, and the target price is also going to be of similar price range as we target 1 is to 2 requirement. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Do subscribe to our Duoscopy webinar channel. Stay tuned for further market updates. Goodbye.